Hey, it's Mack with PriceActionTradingSystem.com, and it's Monday, October the 14th. This will be our chart lesson for today. There weren't as many um, entries today as there probably have been the last few days, but the few we had were some pretty good entries, and it was another really good uptrend day. There was a gap here. You can see this gap. This was not even hard to see. You didn't have to go to the overnight chart really to see this. The market opened during the regular hour around 8:30, right in this circle right here. Um, I guess it opened up on this bar at about the close of this bar right here. And so you can clearly see there's a gap from there and where it closed previously. So, and we spent most of the day, this line right here is the gap. You can see I marked that, I just put a line there to show me where that gap was. And once we filled that, the market kind of chopped around a little bit, and then it chopped higher, and we ended up closing on its high today. Actually, it reopened in here since then. I'm getting a little late getting this done, even though I had this finished earlier. I was a little late getting it done, and you can see that we're still going higher. So for whatever reason, the market just keeps going higher. But it was another good trading day, and this was a fairly clear channel working up here. This would have been a good target. If you use these first two swings, you got a target. I want to say it was right in here somewhere, but you definitely need to be looking at this for a possible target. And if you drew this line off the highs, you would have been thinking, hey, I'm definitely not exiting till at least right in here if you had any runners going. So just something to think about. And if you took this trade, you definitely had runners. Very obvious there, and generally that's where you pick up your runners off of these, strong support and resistance areas. So there were some other trades in here. I'm going to add this new kind of a lavender color to just mark interesting areas of the chart that I think are worth talking about. They're not necessarily a good trade setup for whatever reason, but it's just something that where people might have gotten tripped up or something that was interesting about the chart. So I'm going to add that to our chart lesson. I'll just extend this on up, and so if you see that, you'll kind of get an idea of what's going on there and understand it. You can kind of see there's a midline in here. We bounced off that and got another nice shoot up, and then we tried to get through here and bounced off of it again, and just draw this on up through here so you can see it. But that's generally what we've been getting, a lot of these kind of median lines lately, but this is your bigger channel, and the market got strong enough later in the day where we overshot it and just kept on going. So for whatever reason, they like this market right now, and I'd be careful, on a trend day of counter trend trading, regardless of whether you think it's a strong market or not. I wouldn't counter trend trade on a trend day like this. And it didn't look that strong here, but all prices are doing are going from the high side to the low side, and then once they hit it, look how it takes off again. And this is actually a good sign that the market may be stronger, because it can't really sell off and come. Usually after you hit the upper side, you'll come down, and you may come down on a couple of swings and hit it right in here somewhere. But notice it could never get below 1688 for whatever reason. Everyone perceived, the majority of traders perceived 1688 to be strong support, and prices couldn't get through there. Everybody would start buying there again, and you can see how many times we bounced across there, and then finally the market goes higher. But it doesn't go higher until, guess what, you get this equal move across to this other side of this channel. And you can see that happen over and over on on certain trading days, and so you got to pay attention to that. And I got some questions, a few questions about failed second entries both ways in here, but all it is, this is just a tight trading range. And if you didn't see that, hopefully it makes sense to you now. I'd be leery about selling this because the trend is up here, and you can see the EMA is pointing up. And if you saw this channel, this was a fairly simple channel to find if you drew it off these first few swings right here. But yeah, hopefully you saw this. I didn't like taking the shorts I really didn't even like taking the longs. You notice I didn't really mark a blue long until we got over here to and bounced right here. Um, and the reason I liked this one really was not so much, it was one reason was because we're bouncing off this line, but really because it gave you a chance to get in. It was a little failed break lower. It actually broke a little lower here and almost closed on its high, but it gave you a chance to get in low down here with plenty of room to get out before you got up here. And then you got a second entry that was just maybe a tick worse. And so I like that one. And then, of course, when you got the failed second entry, that's like a breakout pullback long as well. I really like that one. And you had a nice little channel working up here. Then you got the break, but it just kept on going. You know, it never really corrected. But we were heading to the upper side again, and even then we got through there before it corrected, and we got through again, and we're still headed higher here at this point in the day. You know, it's we've opened back up after the 3:30 opening or whatever. So but anyway, let's talk about each of the trades and then we'll wrap this one up. But that's what I saw. I see the channel here. There's a clear median line. There's a trading range right here, and then otherwise it's just a trend up. And there's probably, I didn't even look at this because I was pretty much through trading in here, but there's probably a longer term. You can see that there's a channel there's a trend line right there. See how that comes right across those closes, catches those right there, catches that move. Then you get the break and move to a new high, and then you kind of had a correction right in there, and then one more retest. Pretty much got your new high right there at 215, and this lasted, you can see, started till a little after it really started going up again a little after 3 o'clock. So that whole area right across there is about an hour correction, and it's not what you call a sell-off. The prices just kind of got hung in this area right here, and then finally shot up a little bit right before. Well, that's actually right after the open. For whatever reason, my data series looks like it's wrong again here. Now there it is, extended hours, so I'm okay. So for whatever reason, my line hadn't popped on there today. I don't know why, but anyway, let's just see how this fits on the other side. But that's how I find these lines. I mean, obviously it's easier to find it after the fact, and you can see there that's a great little channel right there. Let's just make that one darker so it's easier to see, because it's kind of hard to see with the shorter term ones in there. And but that's obvious right there. It held perfectly on both sides till you get the break and the move up, and all that is just drawn right off those first few swings there. There's obviously a shorter term one right in here that could have helped you too, but this was the main one on the way up, and I hope you can see that, and that's just crystal clear there, and that would have put you into help you find these trades as well. But I'll explain other reasons to use for those trades without even going to either of those trend lines. So but we'll talk about that in just a minute. But here's the first trade that you really had a chance to enter today. Pretty good move here. You had a little two-legged pull back to the EMA, so, and a little reversal, and so really on a smaller scale, this would be a second entry short. Just kind of like a failed second entry short. It's close enough to act as one, and you see that reversal bar. You know, you've bounced off these lows several times. Your highs are on up here. There's plenty of room to scalp out, and guess what? It doesn't matter. It just shoots right on through there real easy and takes off. And that's what happens a lot of times at the open, that emotion open, and you get to ride with the emotional opening, and then you get a move back, first entry, pull back, second entry. The reason I put this one in kind of the lavender color, and again, that's a new color that I'm going to start adding to just talk about interesting areas. And what you're looking at is a second entry long there, but I didn't like this one. I was really leery of this one because this was more of a trading range. Even though there's a channel here, you could have gotten this move here off of these highs and then drug it down to the low, but you might have drug it down or brought it down to right there first, and you can see that was kind of holding prices, but it's not equal distance there, so I didn't really like it. But regardless, we weren't back to that point yet. And you might not have even had this equal distance. It might have, you know, you could have moved it up and made it fit either way. So you could have seen this either way here. Where's equal distance? It's kind of hard to get that equal distance in there, but you know, that's pretty close. But it doesn't fit down here. Notice we were turning down before we got there. But you could have seen it like that. Generally, it's going to be the lower side, and there's going to be kind of an equal distance move in there. But notice we weren't back to that yet. That was one reason I didn't like it. The other reason is this looked more like a trading range now. And so, but the main clue is that this is congestion. Look at these three overlapping bars. This one's got a lot of stem. This one's got a lot of stem. This one's for sure just a doji. And anytime you get three or more overlapping bars, that's congestion. And it's, you know, you got to be careful entering out of that, because what usually happens is prices snap back. Even if they're going to go higher, they'll snap back. And this is probably what caught some people here. But then it's more like a trading range. And if I draw these lines, hopefully you can see this. You can see there's a bunch of resistance right across there. And then there's your lower resistance. So now you got more of a trading range. And what usually happens is prices break out one way first and snap back, and the bias is up, but you're having to get long up here near the other high. So you don't want to go long necessarily right there when you just came out of a trading range. But what I was really looking at was thinking, hey, prices need to come all the way across here, and then you move this down, and this does look like an equal distance move now. Find where I had it. I think there's about, you can measure it, but you know, eyeballing it's close enough. You can see where it came into play. You know, several times late in the afternoon there. But anyway, that's why I had this circled in lavender, because you could have gotten tripped up there, and I could see that. But what I would say, if you entered here and then you get this nice bar that doesn't really break higher, and then all of a sudden you get a doji, you know, you got in two bars and you hadn't really gone anywhere, you know, you might consider, you know, jumping out of that trade.
We want to know what...
Sorry about that. I had some kind of little advertisement pop up on my screen over on the other screen. So, but anyway, I forgot where we were at now. But anyway, you just got to be careful entering in congestion close to the high of the day. And this was the high of the day at that point. And we just come out of a trading range. So that was why I circled that in lavender. And this is, you know, this is kind of what'll trip people up. And yeah, it's a second entry, but look at it. There's all this overlap here, and you break higher, and it pulls back, and that's generally where you'd want to enter. But then you just got more overlap. And even when it breaks higher, just more overlap. And then finally you come back down, you test this, and you test it again. So you might have considered going long here. Actually, that should be right there. I liked either entering here or here if you were just planning on getting a quick scalp, trying to get out before it got to the high. And you can see it went to the high and it came back. And then you're coming off this low line, and you can see how it closed right above it. So I really like that entry. It's kind of a two legs back. You can see that first leg, a little move up, and it did go higher there, but it's still like two legs back. Right off that trend line, it closed, and then it pulls back, and then you get another chance. But this was a little tiny doji on my chart, so I circled that one in green simply because let me move some of this stuff out of the way. You can't hardly see it there. I circled that one in green because, again, there's all this overlap. But the thing you've got going for you here is you've got a known trading range, so you're probably going to head to the upper side. You've got the trend line right here behind you. You've got this low right here. So there's several reasons, plus it's a second entry long counting off this little failed break lower here. So it's a little more aggressive because it's not a great setup, but it's a good enough setup that I liked going long there. And so you could have gone long right there if you wanted to. Again, it's a little more aggressive because you're getting in a little higher too, and because it's a doji. But you could get in that with a real small stop as well. So, but then when it failed to come down again and bounce right off that trend line, that's a failed. Notice your new low. Pull back first entry short, pull back second entry. So you got a failed second entry short coming off a failed break lower. It's a good chance you're going to get a lot of people trapped right there, and look at it go. And that's why I like that one. And that kind of confirmed this trend line too. We broke below it, or we bounced off of it, then tried it again, then tried it a second time. So we retested that low, or tried to twice, and then we couldn't even get anywhere near it here. And it turns back up. And you might have even waited on that bar, but you missed a few ticks by doing that. And then look, it kind of pulls back, and it could have, this is really just a breakout pullback long. So you might have even thought about going long up here, but it's so close to this high, I just didn't like it. And this setup is just exactly like what we saw over here Friday. Here and here. It's almost identical thing that we saw Friday. So hopefully some of you that saw that recognize that that's exactly, and it almost looks like this one right here as well. We didn't get one test of it here. We didn't get this, even though you might have even had this line right in there at that point, but you only tested it once, and you didn't test it again until way up here. And so, it's a chance you could have got tripped up there. But the best reason to stay out of this one was just all this overlap, and wait on this little, and the reason I liked it was because of that little bitty bar, and that's kind of the same way I like that one. And this one was because of the trap and the two legs back and the trend line and the support. I mean, it was obvious this was a trading range by now, so if you could get in down here with enough room to get out before you get to the high, it's worth taking, and that was possible. Maybe not on this one. I think that's why I circling that one green. There's your 89.50, and you still had enough room to get out. You needed one tick past where this bar got to. So, but then you get your pullback, breakout pullback, and by that time, you got a failed second entry short, and that's where you want to enter. That gives you your really good setup, and that's a not fairly decent setup bar. It didn't close quite on its high, but one tick either way it could have closed. And then it takes off. This one I drew in green. This was the first break of this little channel, and then of course you had this. It's a perfect bounce off that, but again, there's the overlap right there. It didn't break higher until right here, so by that time you had several bars overlapping the dojis, kind of like what we had over here and here. So it makes it suspect. Generally what will happen is prices will break out and come back, and that's exactly what happened right here. Notice that prices broke out of that little, came back, and this is where you might be more apt to enter. But again, this is the high of the day, and you got a double top here, and you got no room. So I didn't like entering there. I just didn't like it because I don't like that setup. It is a failed second entry short. If you're counting off this new low, if you count this as a new low, first entry, pullback, second entry, but the trend is up, so you're better off counting off the highs. It's still a second entry long there, but that's three overlapping bars. One of them's a doji. There's been no retest of this area, so what I liked waiting on was this setup here, and notice that prices broke lower again and then turned up and went out the high. So that's like a breakout pullback long, and look at that bar right there. You could have even waited on this one, I think, but I liked when it broke lower and turned up. I liked going long right there on the stop order. And look at that move up, because they're getting some shorts trapped now right there with trying to go lower again and failing. So that was that got you into the lunch hour. And the good thing about it was any runners were safe off this trade right here. And I think they would have been safe off this one, had you taken it, the one in lavender here, the entry would have been 96. I don't know if that, I can't remember if it came back and got that. I can't remember now. But anyway, I just didn't like that entry for the reasons we just talked about. The same reason I didn't like this one, and the reason I wasn't crazy about this one and only marked it in green. I think you were better off to wait and see if you got a breakout pullback type entry, which you did right here. And then it takes off. There was another second entry long right there, but notice all that overlap. It goes out, it comes back, retests, and then gives you a chance. And that's what you got to look for. You know, if you get this overlap, generally you're going to come back and retest it and give you another better chance to get in, one that looks better. So, and that's really all I saw through the lunchtime. We just talked about a few more past that, and that gets you all the way into 130. And you don't want to be entering in this stuff. There is a failed second entry short here. Notice this new low, first entry, pullback, second entry, it fails, turns up. And notice it went out the low first, then broke out the top. That's a great setup with a trap, and look what it did. So it could have entered there. And that was pretty much it. It gets you too late into the day to be thinking about any other entries. But these lines are the key that really help you. And so try to find those and put them on your chart, you know. And what I always tell people, if it changes or it doesn't look right as prices continue to move, you know, play with them a little bit, because sometimes you'll see something later that you didn't see before. When I was trading, I was concentrating on this right here, and I didn't catch this till, you know, we talked about a minute ago, this bigger channel right here that I just drew this line here, and you saw it fit all the way up. And that's generally what happens. And you copy it and you move it over and it fits all the way up. And that shows you that's a valid channel, because look how it holds prices neatly on both sides. That is a good indication. Just like this flat channel here, look how it's holding prices neatly on both sides. And at first it was a little further down here too. And then it started gaining momentum as it hit this trend line. It couldn't go lower, and so, you know, you move it up. I like to find where you get the most touches that also include the closes. And later in the day, that was really right there, and you can see that you're getting all the touches there plus the closes. Previously, it was down here. You're getting most of the touches, but counting the closes too, and it just kind of creeps up each time. It went up there, and then it went up a little more over. It went up first on. It went from there to probably right in there. It went up a tick or so, and then again it moved up another tick right in there. So try, you know, like I said, just if your lines don't seem to be fitting perfectly as the day goes on, adjust them a little bit, and that keeps you getting them, you know, on the right. Because down here originally I was concentrating on this one so much I didn't even check for this other one, and you see it came into play right here. If you'd have drawn that line, that would have given you more reasons to like those trades right there, where I was simply looking at this kind of median line and the fact that we were trying to go lower and trapping people. So and the real reason I still like this trade at this point was because we hadn't made it up to this line, and so I was looking for that as a target. And I was also looking for them to fill this gap up here. So those were, you know, when you start adding all those different reasons up, whenever you see a trade you like, you know, the more reasons you can find to enter it, and the better that trade is, the stronger it is. And so, you know, I love the trades where you got multiple reasons to enter it. First of all, you aren't back to this trend, to this side of the channel yet. You haven't filled this gap yet. You got everything's above the EMA. You got your first break of this little channel, so you're probably going to do a retest on it. I mean, there's so many reasons for prices to go higher there than there are for it to go lower. And so if you can find more than one reason to enter the trade, that just makes it even better. So hope that makes sense to you. But anyway, it's about 25 minutes worth. I'm going to wrap it up. Hope you've had a good trading day. And if not, come back and do it tomorrow. Make sure you do your study. I'm going to say this real quick because I say this all the time, but I just don't think people understand how important it is. Coming in and trading every day and practicing your trading and getting on the simulator and trading, that's not what makes you a better trader. That what makes you a better trader is getting on the simulator every day and trading, and then coming back at the end of the day and studying what you did. That is where you get better. Just trading and practice trading, that alone does not really help your trading a whole lot. And I try to get that across to people, that where the real progress is made is studying what you did every day, figuring out what you did wrong, why it failed. You know, people will send me their trades and they'll say, this looks like a perfect trade. Why did it fail? And I'll glance at it instantly, because I've got more experience at it. I'll see exactly why it failed, or why, you know, every now and then a good trade fails. But if you're getting a lot of failures, trust me, it's not because you just got bad luck. And that's what some people will come across as, thinking, I just got the worst luck. But really the bottom line is they're not reading the price action properly, and they're getting fooled. And that's the whole idea, is they'll set up these little perfect looking trades and they trap you, and then take you the other direction, you know, and you're fooled is all it is. And that's the whole idea behind it, is to fool you. So the more you come in and study your work, the more you start to see this stuff. And then the next time, you know, you still may get fooled next time, but after you get fooled 5, 6, 7, 8, a dozen times, and you see that over and over, eventually you'll get it. And it may take you longer to get it, but you'll get it at some point. You know, doesn't mean you'll get it this week or next week, but maybe 3 months from now you'll get that particular setup or that kind of trap. But there's so many of them that when you add it all up, it takes a long, long time to learn it all. So just keep that in mind, that the where you make your real progress is not coming in and trading every day. It's coming in and trading every day, but then doing your homework at the end of the day by studying your work and figuring out what you did wrong and trying to correct that going forward, and figuring out what you did right, and trying to do more of that. And you'll see what I'm talking about if you start doing this. If you're not already doing it, you'll come in and you'll say, I knew better than to take that trade. I knew, but I couldn't resist it. I couldn't be patient, and I took it. So, but after you do that, if you know, enough times, you'll eventually learn to be patient there. And I know this because that's what helped me to improve my trading. So don't forget that. But I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.